to ICT on P&C. This is our podcast that we produce to keep you up to date on issues that are going on in Texas. We're focusing on the legislative session right now. We're in the 88th legislative session, so there are a lot of bills that have impacts on the P&C industry. Our last podcast, we did kind of a recap of everything and looked at all the bills and just kind of summarized how those impacts that there might be on the insurance marketplace. On this particular podcast, we're going to go ahead and focus on ESG, which is environmental, social, and governance. There are a couple bills that really look at the insurance industry and how companies, actually not just the insurance industry, but industries in general, and quote unquote discriminating against oil and gas or the gun industry. And this is something that we're seeing across the country. This has made the news. Time magazine recently had a big article on this. And so it's really something we need to pay attention to. Today, talking about it, we have Albert Betts, who is the executive director of the Insurance Council of Texas, along with Angie Cervantes, who is our government relations manager, and she handles all of our action that's going on the Hill here in Texas. So welcome, guys. Let's just dive right into it. I'll let you guys go and talk about some of the stuff that's going on here with ESG in Texas and the impacts that it might have on insurance. It's kind of interesting. We all know that insurance is regulated on a state-by-state basis, and so it's not just ESG bills, but other bills also that might be on a state level that may contradict other states, and so how the insurance industry navigates issues like that. So go ahead and dive in.
Happy to do so. Thank you, Rich. It's you're right. There are probably 50 different ways this is being looked at and addressed across the country. You know, when I got into insurance a long time ago, I won't say how long, I never thought we'd be sitting here talking about something called ESG. Usually it's the boring topics like how to underwrite, how to rate, what risk to cover, loss control, profits, losses, loss adjustment expense. But we're spending a lot of time this session here in Texas, at least, Angie can attest to this, talking about ESG, environment, social, and governance issues. And Texas is reacting the way Texas feels it needs to react, which is to protect the oil and gas industry. Some of the bills will address things like protecting guns. Some will even address things like protecting border security. So it is a little interesting to watch the property and casualty industry be part of this discussion. And I know as we looked at the session last year, we thought this might be an issue, particularly after some legislative changes back in 2021, which dealt with state contracting and ESG. So Angie, some quick comments from you on what you've seen and what you think so far.
Right, and I think it's something that we knew would come up. I don't know if we anticipated how directly some of these bills would be aimed at insurance. And so I know we're going to delve into them, but we do have, I guess, maybe 4 that directly relate to the business of insurance. And to your point a little bit, how you were saying that usually you see things with rating and risks and things like that. And that's where this is becoming very interesting, because the conversation of ESG is also getting muddled with those factors.
Yeah, it's we're assuming everybody listening knows what ESG is, but you know, I think the interesting thing I'll start with is just trying to understand if everybody really knows what ESG is or what it means. And so as we look at issues related to ESG, and I think the E component, the environment component, typically we think about things like climate change or pollution and waste, or you know, what a business is doing that impacts the environment. When we think about social, we're thinking about issues generally regarding product liability, or maybe what's happening in terms of how a company is producing its products wouldn't necessarily apply to insurance here. But our company is producing its products and where it's producing, and then governance, the quality of corporate oversight, or how the company is managed or run or perceived by its stakeholders, or how, for what it's worth, what the ethical behavior of a corporation. So when we look at ESG, we think about those things. We don't typically think about insurance, but there's been a lot of discussion in the media and in other trade publications about as companies, reinsurers, and others look at the environmental risks that we're facing, the increasing severity and frequency of storms and losses, a greater discussion about ESG, the role of fossil fuels in the climate change arena, and obviously Texas, with oil and gas being such a huge component of our economy, is very interested in protecting its interest as compared to some other states who might be taking a different approach. So let's talk a bit about what are we seeing happening with ESG and insurance, some of the terms being used, some of the questions being raised. And Angie, you referenced 3 or 4 bills. I know there's a bill coming up for hearing soon, House Bill 1239, which is the, I'll call it the ESG rating and DEI consideration bill, and it's specific to insurance. So let's start off talking about that bill and kind of what it looks like it does, and then some of the questions being raised about it.
Right. And then I think that one good thing to point out that you just referenced it, that it's ESG is broad. It's a broad term, and it's really not defined anywhere, right? It's we talk about it and what it encompasses, but there is no definition, and there is no definition in these bills that we're seeing, which gives it a very broad scope.
Now, ESG, you're right. There's no quote. I can't look somewhere and find a definition. I think we could probably piece one together, going through various publications, going through NAIC, for example, INCOR, for example. I sometimes joke, and it's probably not funny, that ESG is more of a feeling than an actual definition, and people react to it based upon how they feel. Companies react to it based upon what they think they need to be doing in the marketplace. And so you're right, this, House Bill 1239, for example, does not define ESG, but it uses terms like an ESG score. It uses terms like a DEI, or diversity, equity, and inclusion factors, and basically prohibits insurance company, a wide range of insurance companies the bill lists, from considering an ESG score in rating and rating an individual policyholder. And likewise, an insurance company can't use a company's or a policyholder's DEI considerations in coming up with a rating. And that's
that is the diversity, equity, and inclusion, in case anybody isn't aware of what that one is.
Yeah. So it says a couple of broad things, and I know some of the discussion about the bill has been, do insurance companies actually use an ESG score in developing a rating? And the bill is specific to rating. Does not talk about investments, does not talk about underwriting, talks specifically about how companies rate a policyholder. So we're not sure exactly what that means in terms of a rating. There's a variety of factors that go into rating, and we could sit here and go through what factors impact the rate for auto, impact the rate for home, impact the rate for business. But I'm not aware, and I know as we've discussed with various industry folks, I'm not aware that companies have an ESG score for their policyholders. There may be things such as ESG scores given by financial rating groups. I think AM Best, for example, gives an ESG score, but we're not aware, and I know you've been in those conversations too, we're not aware that there's a company that's rating, for example, I go buy a car, you go buy a car, we don't have an ESG score, as far as I know.
Right. It's not something as commonplace as like a credit score.
Right.
Yeah.
And so it's an interesting way to word it in the bill. We'll see how the discussion goes during hearings, and similarly with DEI, I think diversity, equity, inclusion considerations. I don't know if companies per se have, quote, a score or a rating for that, but you can imagine writing certain coverages you might be looking at, for example, a company's employment practices. You might be looking at discrimination claims against a company. And so I know there's some question about if you're having to consider those as you ultimately come up with a rating for a business, for business commercial coverage, is that in violation of this law? Or would that be in violation of this law as written? And I think that's, as I recall right now, that seems somewhat unclear.
Yes, and I think that's a good point. And then I think that's when you look at legislation, when it comes down to it and implementation, you're trying to read between the lines and what things mean. So when it's broad and there's not a real definition, there is always that risk of how is it going to be interpreted? What is the meaning behind it? And it leads to a little bit of that regulatory uncertainty.
Exactly. Yeah, it's like a little bit of uncertainty. I know Texas law already has some very clear language about discrimination, or at least prohibiting discrimination, some pretty clear rating standards. You know, rates have to be fair, reasonable, and adequate for the risk they cover. And I think that's the overarching concern probably of the industry, is that, you know, that standard's there, companies abide by that. And then rates cannot be unfairly discriminatory. And so there's some law out there already. I don't know how ESG plays into, or the way this bill is written, how it plays into those laws, how it would fit within those. But I know it creates some concerns probably among companies as they look, and if they're writing coverage for oil and gas, or writing coverage for a wind farm even, if they write that coverage, or if they happen to deny coverage for, you know, legitimate reasons that the risk can't be underwritten because too risky, too many accidents, poor loss control programs, for a variety of reasons, you know, I think companies have to wonder, have I violated this law if I don't cover a particular industry or a particular risk? You know, how do I make sure I'm not going to be subject to administrative penalty or some other action? So it'll be interesting to see.
Based on a real risk, right? Just
right.
You're not doing it because,
yeah. So I think that's probably the biggest question out of this is companies underwrite and review risk and then rate that risk appropriately. But what if whatever they're doing to do that somehow is perceived as an effort to not write oil and gas? I mean, we've heard the stories publicly that, you know, supposedly company X or company Y is not writing oil and gas. Oil and gas is pretty lucrative in terms of the availability of companies here in Texas to write for. So interesting to see how that plays out. And likewise, we've heard that there are, you know, companies that are limiting or not writing. But I think we'll see how this bill goes. It's coming up soon for discussion. I'm sure the industry folks will have comments on it, and hopefully can work to come up with something that works not only for the political concerns here in Texas, but also works for the insurance industry and doesn't create confusion amongst companies. What other bills have you seen out there that our members?
So most recently, I think we saw a bill filed. It was filed in the Senate and the House Bill 5048, which also is directly related to insurance companies, and it's pretty broad. And this is a bill that, you're the lawyer, so creates a cause of action for doing certain things in the ESG sphere, and again, really broad. It touches on firearms, it touches on oil and gas, fossil fuels, greenhouse emissions, all sorts of things. So
Yeah,
you
it's
want to talk a little bit about how that can affect our.
that's an interesting one. It was just filed right before the bill filing deadline. And there's a Senate companion to it too, Senate Bill 2149. And that amends Chapter 541 in the Insurance Code, which is the Deceptive Trade Practices provision. And you're right, it's broadly written. I know I've looked at it a couple of times to make sure I understand it. And this amends the law regarding boycotting, coercion, or intimidating by an insurance company. And generally, as the law as it currently stands right now, seems to be geared more towards attempts to restrain trade or harm competitors. But this law would seemingly expand that to include efforts that are, I'll just generalize it, are anti-fossil fuel, against timber, mining, agriculture, guns, immigration detention center policies, border security, diversity, equity, and inclusion policy. And it broadly describes an act that would be considered a boycott, coercion, or intimidation if it could be something in your branding, something in your advertising. It could be a report. It could be a letter to clients. It could be something you've signed off on, a public statement a company has made. So very broad, very interesting. And the most important part of it for an insurance company is one, trying to figure out, how this would apply to not only statements made publicly, information written, publications, reports, etc. But then under this law, you could potentially violate Chapter 541, be subject yourself to a deceptive trade practices action, and that could mean a lawsuit. It could mean an administrative penalty by TDI, and depending upon the act, if you knowingly committed it, you could subject yourselves to treble damages, or 3 times damages plus attorney's fees plus costs. So if I'm a trial lawyer, which I'm not, but if I'm a trial lawyer and I want to find a way to go after insurance companies, this law might be a perfect vehicle to do that. Because as you're well aware, companies often put out statements regarding their stance on ESG related issues or DEI related matters. And just again, first glance through this law, it's broad enough that you may be in violation of it, not knowing that you're violating or simply issuing a statement on one of these subjects. So something definitely that bears a little more scrutiny and keeping an eye on it, particularly because of the risk of this creating a set of new lawsuits that companies have to face here in the Texas marketplace. And we've separate podcasts. We are all well aware of the concerns companies have about social inflation and runaway lawsuits. So this would definitely be likely a big concern for our members.
Right. And I think insurance specific bills too, and you said, you touched upon it, things like communication or anything, all these bills are not really in a vacuum. We have our companies that are having to deal with legislation, sometimes contradictory from Texas versus what's happening in California or in other states. And so in that context, it creates, it's a lot to look at and a lot to consider.
Yeah, it is. It's I'm glancing at it as we're talking. So it could be a statement of principle. It could be participation in, affiliation with, or status as a signatory to any coalition, initiative, joint statement of principle, or agreements. What does that mean? I'm not sure. What could that include? Again, I'm not sure. So I'm urging everybody who's interested in what's happening with ESG in Texas to take a look at that particular law. It is potentially a gold mine for the plaintiffs' lawyers to go after. And obviously there'll be hearings on it and discussion, and the industry lobby folks will work on it and point out any concerns that may be, but definitely worth a look. I will say, to your point about companies and what's happening, I don't know how companies are dealing with this as it changes from state to state, and they're having to navigate and keep up to date and try to operate their businesses and write coverage and provide policies in whatever state they're operating in, but still avoid violating any of these laws or laws in other states that are mandating that they don't do certain things related to fossil fuel or guns. So it's
Delicate balance.
That's a good way of putting it. It's a very delicate balance. I would call it a headache trying to navigate all this, but definitely a delicate balance is the right way to put it. Okay, so there's two big ones. The last one I'll mention is Senate Bill 1060, which is the policyholder statement bill. I think that's how I'm going to just refer to it. And that one kind of flows off of Senate Bill 19 from last session, which dealt with state contracting with investment companies and firms who may be taking an anti-fossil fuel position. And this bill is specific to insurance companies or holding companies, and it prohibits those entities from including a political shareholder proposal in a proxy statement or implementing a political shareholder proposal. And Angie, you might be asking, what is a political shareholder proposal?
Right. What is a political shareholder proposal?
All right, and it's generally anything that tries to prohibit or limit the insurer from taking on risk related to, guess what, oil and gas, fossil fuel-based energies, greenhouse gas emissions, any effort to reduce those. And so it's fairly broad. You cannot take on or implement, even if there is a political shareholder proposal, you can't implement that under this law. So I know.
And I think it also says prohibit or limit an entity's involvement in legal activity for the purposes of, again, achieving environmental, social, and political ends. So that's also pretty broad.
Yeah, exactly. So it's getting at the shareholder pressure that some companies face, and it definitely bears watching. I know last few weeks ago, a letter went out to the top 10 insurers in the state, and some of those happen to be publicly held, but some weren't. But asking them all to provide information regarding their shareholder proposals and their most recent proxy statements related to oil and gas and fossil fuel. So I don't know, that's up to each individual company how they're going to respond, but clearly an effort to try to limit. And I think the quote used in a conference we watched last week was activist shareholders who are trying to harm the oil and gas industry. So that one bears watching as well. I know, again, the industry will be working during the session to try to explain and work with that issue. I think I saw some data, and I may have shared this with you, that the number of shareholder proposals related to ESG initiatives seems to have leveled off. Very few of them are actually approved by companies, but it's still obviously a point of concern for the Texas legislature. So just a lot of activities and companies navigating things that aren't necessarily about their policies, their coverages, their rates. Well, I guess indirectly 1239 is their rates, but not the things they're normally accustomed to dealing with at the legislature. And these are broader social issues that companies are having to try to figure out how to navigate.
Right. And we'll have our first shot at listening to how that conversation goes, at least publicly, and hearing. I guess as of this recording, the hearing is tomorrow in House Insurance, and we'll see how 1239, the bill about rates specifically, plays out. And then see which one moves or what. And I would guess something will move this session. And besides these insurance specific, we do have almost 20 other ESG related bills that aim at, broader impacts, financial institutions, things like that, that we're keeping an eye on. You never know at the end of the session what happens, what becomes what.
I would, I don't like to guarantee anything because I'm not very good at in Las Vegas, but I would almost bet you will end up with some ESG legislation this session related to insurance. There's one more we forgot to mention, House Bill 2752, which is the bill that requires any ESG related rule or proposal has to go through TDI's rulemaking before it can be adopted. So things that may come from NAIC or the other organization. So that bears watching as well. But yeah, you're right. Something will pass. What it is, we don't know yet. We're 63 days into the session. Not that I'm counting.
77 to go.
77 to go. But at some point over the next 77 days, I think we will see some P&C or insurance-related ESG bill that passes. And it may not be in the format that we're seeing right now, but something that will happen and companies will have to adjust. But I know this is getting a lot of attention because it may impact rating, may impact underwriting, may impact a variety of practices within companies. So we'll do our best to keep our members updated, and you can keep up through the excellent reports Angie puts out each week on what's happening with the legislature or on our website or on our ICT app to find out the latest and keep up the latest developments on this and other pieces of legislation. Any closing words, Angie, on ESG? Is it now your favorite three-letter word?
Right. It's I think we predicted that it would come up, but it is an issue that's dominating, which is I think a little bit surprising, but we're learning a lot about it.
Yeah, I know I am. I've read more ESG articles this session than I really anticipated or, to be honest, want to. But I'm happy to read and learn more about it and also keep up with what other states are doing because part of our action here in Texas is in reaction to what some other states are considering or have done. And again, companies are having to do their best to try to navigate different laws and different requirements. So thank you, Angie, for this discussion, and I'm sure we'll find something interesting to talk about next week.
Yeah, thank you, Albert. Yeah, thank you, Albert and Angie, for that. That was a good discussion. I think this is just something that we're going to have to watch, not only here in Texas, but I think nationwide. It's starting to make headlines with various states doing it. So thank you so much for the discussion. As a reminder, we have webinars that are available to members. We have one coming up later in March on DE&I initiatives. We also have one coming up in April, which is with Michelle Steinberg with Firewise, or the National Fire Protection Association. All of that information is always on our website. And of course, in July 12th through the 14th up in Dallas, we have our ICT Property and Casualty Symposium, which is our big annual event and fundraiser for our Education Foundation. Thank you so much for listening to ICT on PNC, our podcast. Until next time, we will talk to you then. Thank you. This has been a production of the Insurance Council of Texas, Austin, Texas. All rights reserved. Copyright 2023.